Hello everyone, and a very warm welcome to this week's stock market update for Thursday, July 16, 2026. And today we're going to cover the Nasdaq 100, which we believe is in a downtrend towards 27,400. And I'm going to show you some live analysis on how we are assessing that target and what we expect next. So let's go straight to the chart and see what we have here. This is the Nasdaq 100 coming up in a moment. And as you can see, it is currently dropping. We had two false breakdowns earlier below this orange trend line, as well as the 50-day simple moving average. It broke below it and then it broke back above it. Two false break-ins, so to say. Below it, back in it. Below it, back in it. And yesterday we had the third breakdown, and third time is the charm. It held, and we're moving lower, most likely to ideally 27,400. Please like and subscribe, and please sign up for our daily newsletter to get the latest and greatest on how we analyze this day by day. We have, of course, our warning levels for the bears. Nothing is ever certain in the markets, so we must know above which levels the market will invalidate this Elliott wave count. These can be used as your stop losses. So we haven't adjusted the blue level yet, but that is, of course, at yesterday's low, 29,192. So that's the first level the bears wants to hold. Then there's a 20% chance, if we go above it, that the downtrend has ended. If we go above yesterday's high, or about open at around 29,767, there's a 40% chance that this downside target of around 27,400 is not going to happen. And of course, if we make a new all-time high, no, it's 0% chance. So 20, 40, 60, 80, and those can be used for your stop losses, depending, for example, on your pain level. But for now, we're looking lower. Look at the MACD, it is pointing lower. Look at the RSI5, it's pointing lower. It never became overbought. That's quite the signature signal of a downtrend. Look where price is. It's below the 50-day. The 10-day is below the 50-day, and soon the 20-day will be as well. So then we have price below the 10, below the 20, below the 50. That is a intermediate term downtrend. All right, so how do we get to 27,400? Well, the first wave down is wave A, and we have wave B. And if we measure around 123.6% of wave A, 1.236 times A, from the top of wave B, we get to about 27,400. If we then take the subdividing wave C, an A, a B, another A, and another B, and we take the gray A, which is 1 degree lower than green, and it's 1 degree higher than orange A, we get a 161.8% extension at about 27,470-ish. So very close. If we then take the A to B, we do the same, and we get to 161.8, again, very close to 27,400. So we have 3 different wave degrees all pointing there, and currently price is pointing that way. We can also see that price is at the lower Bollinger Band, and the Bollinger Bands are starting to expand. So this is weakness. Just as we had here, strength. Price was riding the upper Bollinger Band, strength. Price was above the 10, above the 20, above the 50, above the 200-day, bullishly stacked, bullishly aligned, uptrend. Now it's quite the reverse. We're below these moving averages, downtrend. If this was an uptrend, this must be a downtrend. There is no denying this fact. We have the confluence of 3 different FIB levels. We have had bearish price action, false breakdowns, false breakouts, all that stuff. All of it is bearish because in a bull market, a breakout holds. In a bear market, you get fake outs, and that's exactly what we got. So let's then assess what's going to happen once we bottom. All right. So once we bottom, we should see some nice, first and foremost, we're going to look here at the extensions. All right. So we take this, we measure it from here. And as you can see, we have a nice FIB confluence at around 123.6%. We take that one, and you can see we're getting awfully nicely close. So assuming we're going to get there, all right, let's say we're going to get there. What is going to happen next? This should only be wave A of a larger wave 4. Okay, then of course we're going to get a B wave. How far do B waves go? Well, typically they tend to only retrace around 23.6 of to about 76.4% of the prior decline. So this is going to be the decline to about 27,400, and we have some inverse levels here for 76.4 to 50%. That's quite typical for a B wave. So somewhere around this same level that we did not break through is about a 76.4% retrace. All right, 23.6 is of course the inverse of 76.4 on a scale of 0 to 100 and a 50%. So it's quite logical to expect this B wave to meet resistance one more time right there. And then, of course, we're going to get the C wave lower for the next leg lower. So we're going to top out so at resistance somewhere around there. It's a little bit of a give and take. And then we don't know if the C wave is going to be equal to the A wave or if it's going to extend to all the way up to about 161.8%. So this should then be red wave B. Sorry, that is of course red wave B, which means it is a degree higher, right? This red wave A, this is going to be red wave B. And then this is of course going to be red wave C. And we don't know yet what the extension is going to be, somewhere around there. And that should then complete wave 4. This matches seasonality as well. Seasonality is turning bearish for the remainder of this season. That means from the summer into the fall. So somewhere between 24,500 and about 26,500 is where we can expect this C wave to bottom. But for now, first and foremost, we're going to look for lower prices. All right. And then we're going to look here for a bounce. And then we're going to look for another decline. Corrections are always at least 3 waves lower. Why do we think this is going to last that long? Because the prior first wave and the prior second wave were the rally from 2020 to 2021. And then 2022 was all of wave 2. So wave 4 should not be done in a couple of weeks. Wave 4 should last for months. All right. This B wave, by the way, can also make a new all-time high. And then we have a irregular B wave, and wave 4 will be a flat to be determined. That we don't know yet, so we're just going to go with standard retraces. So that's what we're going to look forward to, 27,400 first, as long as we hold below these warning levels. Of course, resistance is now at these moving averages as well, and you can see we're moving into the Ichimoku cloud. So overall, the Nasdaq 100 doesn't look too happy, and we believe that we are now pointing towards 27,400, from where at least a bounce can materialize, which can make new all-time highs, but most likely we're seeing somewhere around, I would say 29,500 plus or minus 500 before the next leg lower materializes. All right, that's all I have for this week. Take care, trade safe, like and subscribe. Please become a newsletter member and get the latest and greatest daily in your inbox, and stay informed, because nothing is worse than being uninformed or worse, misinformed.